May profits be upon you. I hope you guys are doing well, all my viewers out there. Welcome back to the YouTube channel. All right, you are trading with RT Money. And I would like to invite you guys to come on down to Lions Den FX, where our founder, Drunken Monkey, and myself have found within our hearts to start a membership drive, right? It is free to join our Discord. Now, we have a free Telegram that I definitely want you to sign up to. All right, get on that free Telegram because we do give out good information there, and I share trade setups that we got going on inside the Discord, excuse me, at times. So you can catch some good stuff there. But we have a membership drive going on at Lions Den FX Discord, the premium membership. All right, come and get a taste. Come and get a taste of what premium membership entitles you to. All right, mentorship, Zooms, live streams, and all kind of good stuff. All right, come on down. Drunken Monkey has the fire signals that he gives out daily. All right, so I wanted to put that out there for you. Now, let's get down to business. We're going to take a look at the RT Money Meter, which is in front of you right now on your screen. The RT Money Meter tracks the rate of change of each individual currency futures from a swing perspective now, from a swing perspective, because we track the rate of change over 15 weeks. All right, and I update this list every week, and today was the day. All right, and all right, I like to update this every week now, and you can see that the US dollar has moved and solidified itself at the #1 spot. It only dipped down 1 week, 2 weeks ago, right? But it's at 395. All right, it was at 425, a little, marginal move down a little bit. Kind of last week, it kind of moved sideways, to be honest with you, but it was a very marginal movement. It just moved sideways, and you can see the Swiss this week is at 383. That's a little bit of an increase, but it's kind of like bullish neutral. It too moved kind of sideways and didn't do a whole lot last week. All right, but you see that red asterisk I have next to it, right? That means that there's some nuance to this call. Yeah, it is one of the stronger ones. It is one of the stronger currencies. All right, only relative to the most weakest. All right, so this is where I would be looking to put it against the weakest currencies. Now, the Aussie is at minus 0.47. Last week it was at minus 278. It actually gained a little strength, but seeing as it was at neutral territory the week prior, it went down and came up a little bit. You're going to have to be careful with this one, trying to put it against strength plays. I wouldn't. You understand? I would look for other currency plays. CAD, same deal with the CAD. The CAD was at minus 0.68 last week, and this week is at minus 0.75. It's staying neutral, kind of on the negative side a little bit, neutral, but it's basically neutral. And I'm not looking to play it against weaker pairs either. All right, the New Zealand dollar, that's an interesting one. All right, last week it was at minus 378. This week is at minus 97. All right, we're going to have to take a closer look to see just how strong or weak it is. All right, this is not in the top 5 of strong ones. I mean, it's in a minus. It is in a minus the top 5 of strong ones, but this one we'll have to take a look at it. That's why I look at the individual currency charts to go along with this ranking. All right, it is ranked at #5, and as according to the 2 weeks ago was at it was at neutral territory. Then it got weak, and then we have a little bit of a pull up at minus 97 from minus 378 last week. I'm thinking it's more negative than positive. You understand? All right. Pound is still weak, minus 417 last week, minus 404 this week. Kind of moved a little bit sideways. All right. It's consolidating a little bit. Yen, minus 452 last week. This week is at minus 8. Minus 8. We skipped over the euro. All right. A minus 578, excuse me. So the yen is the weakest. All right. The weakest. The euro heading in the wrong direction. Minus 485. This week is at minus 421. Now you would say it's a marginal, negligible increase in strength. No, not really. We'll take a look at the individual. You'll see what I mean. All right. So there are nuances. There are nuances that you can only see when it comes to strength and weakness. There's nuances that you can only see by looking at the chart itself. Let's start with the Dixie. All right. We'll start in the order in which I have them ranked. All right. From 1 to 8. US dollar first, Swiss next, Aussie, CAD, New Zealand dollar, pound, euro, yen. Okay, let's go. All right, starting off with the euro. Let's look at this COT report. Oh, that is the wrong date. Don't you, hey, listen, don't you laugh at me. All right, so I'm doing the best I can here. Well, what I have. All right, anyway, as of last week, the big banks are 78% long on the dollar. All right, the majority is long, and this is when I really pay attention, when it's like 75 and better majority in either way, long or short. That's when you can get the most out of these COT reports, because we're getting the COT report itself. It's getting released to us way after the fact. You understand? We get this report was made on the 23rd, but we didn't get it till last Friday, right? So you gotta just use it as a confluence and don't base trades off of it, for God's sakes. Anyway, so what do we have? If we're looking at the weekly, right? I'm looking at the weekly because I want you to see this line here. All right, at 109.76. Why is there a line at 109.76? Because this is a key level of support. You see, a key level of support and resistance. I'm not a support and resistance trader, so don't even think that. This is a key level, meaning that price reacts a lot here. Reacted as support here, reacted as resistance here. All right, we get past it here. It acts as a support and then comes back down. We tap it here. We come back again. This zone is acting as support and resistance. And here we are, strong resistance here. Okay, tap, tap. All right, so what that brings us over here. We are in, I just want you to know, we are in the weekly supply zone. We are in a weekly supply zone here. All right, and we are coming up to the extreme of it. All right, we are coming up to the extreme of it. So I just wanted you to see that. This is a bull market, as bullish as it's going to get, and it's very strong. All right, and you can see last week ended bullishly. We closed the weekly candle bullishly, right, after a very strong week prior, right? But this is kind of on the doji side, right? We did sweep the previous high, all right, and I do believe we will end up taking out that high that I just pointed to the left. All right, we're going to probably take out this zone of supply and hit that 109.76. I do believe we are nearing. We're not there yet, but we are nearing the top of this bull run. So be careful. I do think that price will probably continue more bullishly, especially in light of the Fed's policy of the rate hikes, and as hawkish as Jerome Powell is talking. I'm thinking that 75 basis point raised, right, is probably likely on the next hike, which would be more bullishness for the US dollar. So we'll see, right? And so let me take you to the daily. And on the daily, you can see the structure is very sound. It's very easy to see. A higher high, right? a higher low, a higher high, a higher low. Yes, this is a significant pullback for me. All right, a higher high. We break this one, breaks this high. This one breaks this high. All right, this is where those highs get broken, and we know we are bullish. We do have another pullback after making the new higher high, and here we are. We break structure here. All right, we break internal structure here, internal structure here. This is telling us that this pullback is over. All right, that pullback is over, and that we can expect this move to the upside. Okay, price did come down with the news last Friday, right? All that good news for it wasn't good news. It was Jerome Powell, the Jackson Symposium, and all that stuff. And you see how the hawkish tone pushed the dollar to close Friday very bullishly. All right, so this is a bullish engulfer of the previous candle, and when it engulfs both the low of the previous candle and the high closing with the body with a very little wick to the upside, you can expect more bullish price action. So I'm looking for dollar strength pairings next week, and I'm going to be looking for US yen, euro USD, pound USD, and New Zealand dollar USD. You understand? All right, take note, take note. I'm looking for those plays. I'm looking for US dollar plays next week. Next. Why did I do that? Okay. Next, we're looking at the Swiss franc futures. All right. It was very nice. It's very nice. I love this kind of price action. All right. We have an impulsive move, and then we go into correction, up and down, breaking the high of the previous high. This is all internal highs. This is an IBOS, an internal break of structure. We have another one follow behind that, a lower high. I mean, a higher low, excuse me. And then we're waiting for this to get broken, that high to get broken, and it happens. Boom. All right. This is the definition of a bullish uptrend, right? On the daily. All right. On the daily, we are in an uptrend. However, what do we see here? What do we see here? We see that we have an IBOS, all right, an internal break of structure. This lets us know what? I just finished telling you what it was. Just finished telling you what it meant. It means that the pullback to correct this impulsive move, this is all correction, all right? And how do we know when the pullback is over? The internal break of structure. Boom! All right, so we should be looking for more downside action. I am bearish. I have a bearish outlook on this the Swiss franc because of that internal break of structure. Doesn't mean that we won't see a pullback and then down. We could get a right shoulder being formed here. For sure, we could definitely get that, but it's signaling that the correction is over. All right, it's signaling that the correction is over. All right, price could go and take that high out, but this when you're reading market structure and price action, you look for signs, you look for indications. This is usually what comes before more downside action. But we might not even see that go up. Why? Because we already swept liquidity here. We swept those highs. That is very key for me. But what you have to expect after every break of structure, you expect a pullback. All right. And this may indicate that price doesn't want to go up any further. I'm not looking at it that way. All right. Because it already swept. All right. Well, I'm looking for an area up here in this leg of structure that price may come back to. Got my eye locked on this one right here. So listen, I don't want to get too far into this. I'm sorry. I'm just saying that I'm not keen on taking what you call strength plays with the Swiss, because on its own, it's not very strong. but relative to the weaker pairs like the pound and the euro and the yen, it is stronger. Got it? All right. It didn't get up here, correcting for no reason. But this on its own, this looks like the strength is about to wane. Got it? I hope you do, because this is nuanced and you have to be able to read that. On the COT report last week, the banks are 56% short. They're 56%. The majority is short. They opened up 1,768 long positions. All right, and that was last week. They opened up 1,768 long positions and only closed 923 shorts. So they are still, they were still long last week. So we could see the pullback after this impulse. We can see that pullback start. We can see that pullback start. It doesn't mean in the longer term that I'm looking bullishly here. No, we might get that pullback. We may get that pullback just to form a right shoulder. And if it's a sagging right shoulder, if this is the neckline and this is the shoulder, this is where the shoulder comes into alignment with that sagging neckline, this will put me right where I'm thinking price is going to go. So we'll see. We'll see. Sagging necklines, I should tell you, let you know that it's a higher probability that price is going to fire down when it comes to head and shoulders. All right, so the next one would be the Aussie dollar. The Aussie dollar. All right, let's take a look at this. We're looking at the daily. All right, the COT report says that 74% of the banks are short in this. Short. They opened up a lot of positions, both of them short and long. 3,507 long positions and 4,287 short positions. All right, but their majority is short. The majority of them are short. It's almost 75, not quite. See how it formed this head and shoulders here? This is what I was talking about. This is what I'm talking about right here. All right, this is the Aussie dollar now. This is the Aussie dollar, and we have a neckline that seems to be sagging. All right, we have a bearish engulfer. All right, a bearish engulfer that engulfed the entire range of the previous candle. What have we just finished going over? I hope you're catching these gems because I'm trying to drop jewels on you, man. All right, so what I'm expecting is price to continue low. All right, we have a bearish break of market structure and an internal break of market structure. Why? Lower low, lower high, lower low. After it breaks that, lower high. Is the pullback over? That's correcting this move. Is the pullback over? I say yes, because we have an internal break of structure. So we could see more downside action, especially looking at a head and shoulders formation there. This is on the daily now. Keep that in mind. So I'm expecting more weakness in this market. And I'll remind you, the Aussie dollar is one of the top 3 stronger ones. All right. Last week it was at minus 278. This week is at minus 0.47. It moved up. It moved up. But prior to that, it took a dip, from 0.62, kind of neutral, to minus 278. So it dipped down, then came up. All right. So I like the fact that this looks pretty definitive to me that price is probably going to come down. It did sweep liquidity. That makes this a legitimate. I'm getting ready to get off into a whole bunch of things. All right, just look for more downside action here. All right, so if you're looking for Aussie plays next week, all right, if you're looking for Aussie plays next week, I'd put this against the dollar all day, every day. All right, all day, every day. All right, because dollar's going one way, this one's going the other way, and this market looks like it wants to go further. All right, so let's go to the next one, shall we? The next one is the Canadian dollar. The Canadian dollar. 64% of banks are long on the Canadian dollar, opening up 1,744 long positions, closing. Oh, they actually opened up 5,414 short positions. All right, so this is kind of mixed and confusing. So 64% long, you know, that information isn't really helping me. It might help you, but that doesn't help me. What I want you to take note of is very similar to the Aussie. All right, we have. Well, let's take a look at the weekly first. Just take a peek so you can see that price came after a nice bullish run here. Price started doing this. All right, and what are we looking for? We're looking for this loading, that low to get broken. All right, because this is the low that ended up breaking structure here, taking liquidity. This is a pretty decently strong low, but it didn't take that high. So it's inherently weak because it didn't take that high. All right. But it did move the needle up in the strength area. All right, because it broke structure to the upside. It made a new high. All right. I don't want to get too lost in that. So I'm looking all the way over until this one breaks. And when it did break, this established a nice a trading range here. All right. When you go lower than this low, then price is making internal breaks of structure, right? We did go lower here, but it was only a liquidity grab. You see how the reaction was bullish afterwards. So that lets you know that it's not indicating that it wants to go lower yet until we get a close below this strong support here. And that's what happens here. Okay. All right. And this is when my antenna goes up, when I start to see internal breaks of structure. And price came lower, went a little bit lower, but we did not get lower closes. You understand? There's nuance here. All right. Without a lower close, I'm not believing that price intends to go lower yet. All right. And especially after the reaction is bullish. All right. So this is how you keep out of trouble. Now, what do we do here? Price does take out liquidity. We chop it up. This would make the Canadian dollar not a favorite to trade for a couple of weeks because it was moving neutral to the side, right? But then we have this bearish engulfer here last week. The week prior was very bearish. All right. This past week here, you can see that price came up to retest this consolidated area, the range of this bullish candle. All right, the bearish engulfer pattern. It came to trade within that bullish range and closed bearishly. All right, and I'm looking for price to actually continue more bearish, looking at this weekly structure here after 2 weeks prior of bearish price action. Okay, and we have an internal, all right, because this is your external trading range, top, bottom, right? This is your external trading range. All right, this is your internal trading ranges. All right, and this is the internal of the internal. Now you don't have to get all caught up in labels and all. What you would need to recognize is there was a break of market structure here. All right, this indicates that price will want to go down. All right, that's all. And after a break of structure, what do you expect? A return to impulse. Price did come back up to the impulsing zone, the origin of this impulse. This is the correction, and this is the new beginning of the new impulse, right? And what do I expect from here? More downside. Yes, I do. Maybe price comes back up here to test, but I'm looking for more bearish price action. All right. So I am with the Canadian dollar, I'm looking for more weakness. I'm looking for more downside action. Yes, it rates top 4, right? But look at the prior weeks. It's been sideways for a good minute. All right, we have a bearish engulfer that is a pretty strong. All right, and we already had a pullback. Is the pullback over? Is the pullback over? And for this leg of structure, we have a internal break of structure here, and so I'm looking at this as quite possibly the end of this pullback of this leg of structure. I'm looking for that to be a lower high, and I'm looking for a lower low to be made, and I'm looking for this low to get challenged, because this low, although it broke these internal structures, it didn't make a new high up here. It didn't make a new high up here, right? So I'm looking for this as a weak low to come and liquidate. Got it? All right. So I'm weak on the I'm on the weak side of the Canadian dollar, pitting it against the other trades, where is it at? Putting it against the lower currencies. I'm looking at this as in the middle, and there are better trades to get. That's all I'm saying. That, yeah, this one, maybe against the US dollar, I will put this against the US dollar all day. All right. But, but there are other strength plays to take with the US dollar. All right. Let's go to the New Zealand dollar next. New Zealand dollar, the majority of banks are 52% short. All right. And so this isn't going to give you, the COP report isn't going to give you much in that regard. Unless they have big purchases or big what do you call them, profit taking numbers. This isn't going to help you. 50-50s, no. So what do we have here on the daily? It's plain to see we have a bearish market, and this technically did break here. We have a pullback and then down further. We're bearish. All right, we're in this trading range, and price did come up, snatch that liquidity up there, but continue bearish afterwards with a internal break of structure. Once again, that means the pullback is likely to be over, and we have an impulse, we have a correction, and price is bearish. You see how bearish it closed on Friday, right? This is Friday candle right there. All right, and after a break of structure, we had the break of structure happened. We did get a pullback. We did get a price take out the high for liquidity here. So we could very well see a gap down. We could very well see a gap down in these situations, like the prior charts, the two prior charts I just looked at. All right, that bearish engulfer is pretty significant. So I am looking for more weakness in this currency. Let me take a quick look at the weekly. Yeah, look at that bearish engulfer. That's very strong, right? Price does come back up to retest the base candle of this bearish engulfer pattern, and it is continuing bearish. Look how last week Friday it closed very bearish without hardly any wick. I'm looking for more downside. Yes, I'm looking for more downside as we come further into this demand zone. All right, there's a demand zone over here, and we don't need to get all into that. We just need to know that this is a weak on its own. It's weak, a weak currency. That's why I will put it against the US dollar, and I will put the Swiss against this as well for further declines. Got it? Good. We're going to the next one. And the next one would be the British pound. British pound, it's weak already. All right. As of last week, 60% of the banks are short the British pound. 60%. All right. But that's down from the beginning of the month where they were 75% short. So they're starting to go over to the other side. Look at this. They added how many longs? How many longs did they add? 14,699 longs. They also added 9,556 shorts, but that's a big addition. Look what they've been adding since, prior. Last week, the week prior, 1,865. The week prior to that, 1,200. 12,914. I'm sorry. All right. And they're doing the opposite on the other side with their shorts. All right, except for this week. But these are big numbers. They're adding a lot of longs. So they're looking for this market to turn around. Now I want you to see something very clearly. All right, this is the weekly. This is a weekly zone. A weekly zone. We are down to the extreme of this weekly zone, demand zone. All right, we're down to the extreme, and this is where the magic happens. This is where you start to see markets turn around in reverse. All right, so I'm very cognizant of that. Now we have a weekly break of structure here. All right, we have a weekly break of structure here. All right, but you can see for weeks we've been very bearish. All right, but we took out this low. That means we're still bearish. We're confirming the and resuming the bearish trend. All right, but we are coming to a point where we may see this overstretched market start to bottom out, lose momentum, and start to turn around. We will see. We will see. That here's the deal, though. I want you to recognize something. Did we take out that high? No. This low is suspect to me. It looks like it may be vulnerable. All right, so price could definitely continue lower. All right, just like the euro is continuing lower. All right, so we just want to be wary that we are in the extreme of the weekly demand zone here, and things could turn around all of the damn sudden, and you'd be like, oh snap. Okay, so I want to highlight that this lower low here and this lower high, we confirmed price wanted to go a little lower. We don't have those big momentum candles going down to the downside here, but I do expect more downside. I do expect more weakness to come. Okay, and this engulfer here, all right, it completely engulfed the prior two candles. All right, and we swept liquidity, so I'm thinking that price is probably going to continue lower. If we do see a pullback after every break of structure, you expect a pullback. Is this the end of that pullback? Is there more to come? I think this goes lower because I don't think this pullback is over at all. I think this goes lower. This low likely might get taken. We'll test this demand zone. We'll go deeper in this demand zone likely, and maybe take this low and start to form a reversal pattern. We'll see. But for next week, I'm taking this taking a weakness plays here. I'm looking at weak plays against the British pound. Okay, got it. Good. All right, let's go to the next one, which will be the euro. The euro majority is 55% short. I'm gonna stop reading there because you can see that they've added a bunch of longs here, 11,599, and they've also added shorts, 12,924 shorts, 12,000. All right, they've been adding shorts for the last few weeks. All right, they did add a few here on the 9th, but they did close 9,000 of them at the beginning of the month, but they've been adding shorts. They've added longs here, took shorts, closed some longs, added longs, closed longs, and added a whole bunch of longs. So price, they may be preparing last week. They may be preparing for what might be coming. All right, price did the same thing, swept liquidity as it pulled up after breaking this low. All right, breaking this making a break of market structure, very similar to the pound, and we are hitting a weekly demand zone here. So I'm expecting price to do a little dance here before quite possibly turning around, because I don't think this 38% pullback after an impulse like this is it. I think we're going to get to at least the 50% mark before we start to see an ending to this pullback. All right, so the way I like to see this is we have a change of character already shown. All right, we're showing a change of character. No, not yet. No, I'm sorry. On the lower time frames, you can see a change of character on the lower time frames that may indicate that there's more pullback coming. All right, I don't think the pullback is over, but we may go lower, which is what I'm thinking next week. We may go lower before price starts to show more definitive signs that it's coming up. So I'm Euro weak plays next week. Euro weak plays against the US dollar all day. All right. I'm taking the Euro shorts for sure. All right. And quite possibly Euro Swiss. All right. And the last one will be the yen. All right. Yen. The majority is 63% short on the yen, according to the COT report last week. They opened up 5,426 longs, and they also added 15,342 shorts. Okay, so the yen inherently weak, all right, because of the Bank of Japan's policy of devaluation right now. Let's go to the weekly. You can see how the week closed. Previous week, very bearish. This last week closed bearish, but in the doji, right? We haven't broken that low yet. So we are closing below the major breakout level of 2002 right here. If we just look at the what do you call this? The structure. All right, that's an old low, and we got you can see we got a big old head and shoulder pattern here. All right, two shoulders and a big old head in the middle. All right, and we're at the we're just below the neckline. I'm looking for further declines in this market, especially concerning the BOJ devaluation policy. All right, but just looking at the price action, you can see this precipitous drop, a pullback, another precipitous drop, and we are now trading. We were trying to get above this major breakout level of 2002, but we came back below it with some momentum the previous week, right? This past week, it moved a little bit more bearishly, and I'm expecting prices to remain bearish. I'm definitely looking for weak plays against the yen, but there are better plays. You understand? There are better plays. I'll put the US dollar against this, the strongest, but the rest of them, you know, we could see price do some sideways mess next week here. So don't go crazy on the yen. All right, that's it. That's it for this. All right, so we've covered all of them. We've looked at the individual currency futures. We've noted that even though one might be ranked high, all right, it is relative strength that we're looking at, that we pay more attention to relative to the rest of these weak currencies. The Swiss is pretty strong, all right, but on its own, it's kind of weak. So I don't want to go crazy with it. I only will put it against the most weakest, all right. And we got a fair assessment of putting the strongest US dollar plays against the weaker, like pound USD, Euro USD, yen, USD yen, all right. And I will look at the last week's plays that we had for pound Swiss, Euro Swiss. Those are, I think, it's going to continue bearishly. Okay, I hope you made note of the pairs that I mentioned. All right, NZD USD as well. I think that's going to be a good play for shorts as well. But watch out for these. They're playing with the Aussie and CAD pairs. They're better plays, better, more definitive, more. There's more of a you know, more. There's more of a strength to weakness ratio. It's higher with other pairs. All right, you don't want to get involved with CAD or Aussie and New Zealand and when with other pairs, like with the pound, NZD, and all that kind of stuff. You don't, the cross pairs are, there's clearer plays to make with against the US dollar or the yen, that kind of thing. I hope you get what I'm saying here. All right. I don't know why I did that. Okay. If you like what the content today, if you like what I put out today, hey, hit that like button. Do like and subscribe. All right. Do it both at the same time. That way you save time. All right. You want to make sure you hit that bell icon to catch my updates and get notified with those updates. I'm always in the community tab of my YouTube channel. So I leave updates there, and I'll put them in the Telegram as well. All right, do not forget, Discord is running. Our Lions Den FX Discord is running a membership drive right now. So come on down, check us out. Give Drunken Monkey a DM, a direct message. All right, when you join the Telegram, give Drunken Monkey a direct message and tell them that you want in on the Discord. You want to take advantage of the promo that we got going on right now. All right, and I will see you in the next video. Listen, I'm going to put this on in a playlist for the week ahead. All right, starting the week of the 29th through the end. So till Friday. So you can just let this play, or you can click on the next video on your screen right now, and I will see you in the next video. Thank you for watching.